Hello students, welcome to ShirtBack Academy. In our lesson today we're going to be continuing in Module 1 of our Personal Finance course. The topic for this lesson is Section 1.4, Financial Planning. Let's begin. What are financial plans? Financial plans are the documents that contain a person's or business's long-term monetary goals. They also help to display what our current cash situation is. There are 6 common features of a comprehensive financial plan: cash flow, asset and risk management, taxes, distribution, and estates. Cash flow is determining the weekly, monthly, and yearly inflow and outflow of cash. Assets are when we manage all of our physical and intellectual property, business equipment, and real estate. Assets can be owned by a person or a business. Risk management is using analysis to make decisions on the asset types that we want to invest our positive cash flow into. When we have positive cash flow, we may want to invest in things such as stocks, bonds, or real estate. Each one carries their own risk profile. Taxation is when we make sure that we pay all of our federal, state, and local taxes. These can be taxes on income, property, or investments. If we don't pay our taxes, we can incur big civil fines or even jail. Distribution is when we identify opportunities to donate or give away our money or assets. We can give or donate to individuals, nonprofits, and charities. Estate plans are the legal documents that outline how money and assets are passed out when a person dies. Certain components of our financial plan may require us to use experts or licensed professionals. There are 3 common financial plan types: short-term, medium-term, and long-term. Short-term financial plans are for time periods up to 1 year. Short-term plans are typically cash flow statements that we use to budget for operating activities. These would be items such as rent or utilities. A medium-term financial plan are for periods of typically 1 to 5 years. These plans will maintain and replace assets and also account for education and development. We may need to maintain or replace assets such as a car, or budget for attending college or running a business. A long-term financial plan are for periods of 5 years or greater. These are typically plans that prepare for family and retirement monetary goals. These could be things such as your kids' college fund or your retirement accounts. Working capital is the difference between a person or business's current assets and liabilities. If the liabilities are greater than the assets, we have a deficit. There are several types of current assets we must account for. The first are accounts receivable. Accounts receivable are the goods and services that customers have ordered but we have not yet been paid for. We use invoices to record all the unpaid items. Inventory are the goods and materials held by a person or business that will be resold. Our inventory should have liquidity. Liquidity means that an asset can be easily sold and converted into cash. A common liability are accounts payable. Accounts payable are the money owed by businesses to its suppliers for goods, materials, or contracted services. Over on the right, we have a screenshot of a cash flow balance sheet that shows some assets and liabilities. Our total assets between cash, accounts receivable, and inventory are $80,000. Our current liabilities are $40,000. That would mean that our working capital currently would be $40,000. It's the difference between current assets and liabilities. Expert advice is when we seek professional help for a component of our financial plan. We use experts that provide skills and analysis in areas such as filing taxes, applying for scholarships, planning for retirement, and legal documents. There are some best practices we should use when we seek expert advice. First, we should ask to verify their degrees and qualifications. You want to make sure they can do the job that you need. Second, we should clearly define the scope of the services that we need. We don't want the professional charging us for items that we didn't want. We should have written terms for our fee payments, and we should consider if hiring them fills an actual need and does it lessen our stress. Some common financial expert types that we may encounter are accountants, attorneys, and financial planners. Accountants prepare our financial planning documents for people and businesses. Some common accounting services include cash flow statements, budgets, and filing and preparing taxes. Attorneys, or also lawyers, are licensed professionals that provide legal services to people or business. They create written contracts, develop estate plans, and represent your interests in court. Financial planners are individuals that advise and manage personal and business monetary assets. They help plan for long-term needs. Financial planners are commonly used for estates and retirement. Be aware of nonprofit agencies that may provide free or lower-cost financial services to distressed communities. These organizations help to fill the gap for individuals that may not be able to afford some of the higher-priced experts. That will conclude this lesson. In our next lesson, we will cover Section 1.5, Net Worth. If you have any questions about the contents of this lesson, please review the course notes for Section 1.4. We thank you for following along to the video. We hope you enjoy the rest of your day. Take care, everybody.